afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets attempt a recovery from the day's low but trade with a negative bias. Banking stocks are outperforming. Nestle India is the top loser in the index today after its second quarter results. Equitas Holdings is trading with losses after its second quarter numbers. The stock has fallen to its 52-week low. And Britannia, Hindalco, Coal India and Adani Ports will be the four Nifty companies reporting their quarterly numbers today. Good afternoon, Devina. Well, it's turning out to be a mixed session where banking stocks are once again outperforming.
Yeah, and especially the PSU banks, Navneet, led by Bank of Baroda and the kind of numbers that are posted. So this is what you've got in terms of the intraday chart of the Nifty 50. You know, while we're talking about the fifth straight week of gains for the US equity markets trading at record highs, we somehow seem to be struggling in and around that 12,000 mark for ourselves. Nifty Bank, that's up about 0.5% plus, so 30,900 is where it's trading at. And today's contribution is coming in from the PSU banks. So if you have the Nifty PSU banking index, you can just quickly take a look at how that particular index has been doing, because last time we checked was up closer to 1%, along with the rest of the market that's come off, but that's still got gains of about 0.5% plus. Coming to the mid cap and the small cap index and the broader market space, overall the last week's outperformance I think carries on into this week as well, because it's doing relatively better to the benchmark index. So the small cap index is up about 0.1%, while the mid cap index is up almost 0.5%. And individual stocks contributing to that on the back of earnings. Coming to the heat map then, and this is what you've got. So slightly better than the morning's opening session, but still losses coming in the form of Nestle posted its quarter two numbers. You've got Vedanta down about 2%, Hindalco Metals looking weak this afternoon, and Reliance Industry also contributing significantly to the downside, about 1.2% lower this afternoon. HDFC Bank, Britannia reports numbers today, so ahead of that it's looking slightly weak. What's doing well is the sudden interest that's coming back into a Z, which is now propelled it past 300. So you're going to be watching out for whether or not there is some announcement, some news with regards to a deal for Z. Yes Bank continues to do well. Friday session ended the day with gains of 4%. Today also is up about 4.5%. GAIL, Kotak Mahindra Bank, ICICI Bank, NTPC, all of them doing well. So it looks like there has been a slight bit of an improvement in the breadth as well as we speak right now. Coming to the broader market space, just want to quickly look at the mid cap and the small cap end of the market. Motherson Sumi reported numbers just a few moments ago. Amar Raja Battery on good numbers is up. RBL Bank, Edelweiss continues to do well. I think now is at 115 odd. Bharat Forge, some improvement from Friday's session, posted its numbers. Reliance RNAM is up about 2%. What's losing is Tata Power, JSW Energy, and then you've got Adani Power, which is looking weak. Max Financial Services gives back a little bit and is seeing some profit taking. Small cap stocks again, which are somewhat holding out in today's session, flat right now. Dish is up 5% in tow with what Z has been doing. Then you've got Credit Access, Grameen, Dilip Bilcon, JM Financial doing well today. What's not doing well is Equitas, the big cut that we're seeing today in the back of its results disappointment. Avanti Fees also profit taking here. Raymond profit taking. The stock was up 20% on Friday. But that's what you've got in terms of the individual stock moves. What's happening on the futures and options space? Navneet is highlighting that for us. Navneet.
Thanks for that, Devina. Well, the volatility seems to be on the higher side. We've just started the week. It's a truncated week, so you will have less number of days when it comes to weekly options expiry. As we speak, 16.4 is where India VIX has been trading. But as we've been highlighting, there is more action which is coming on the bank Nifty. As you can see on your screen, Nifty futures open interest is down about 4%, giving you an indication this is a sign of long unwinding. Maybe traders who were long on Nifty futures have started to book profits. But look at Bank Nifty, and remember, this is just not about today's action. Since the time this series has started, we've seen a lot of open interest being accumulated on the Bank Nifty futures. Of course, we entered this series on a very light note, and maybe because of that, more and more open interest has been building up here. 16 to 17% higher, but also a point to be noted, Bank Nifty futures are currently trading at a discount versus premium that we had seen on Friday's close. Open interest distribution for this Thursday's expiry, maximum open interest on the call side continues to be at the 12,000 level, whereas on the put side now, it is distributed between 11,700 as well as 11,800. Now remember, in today's session, we did we did touch the 11,850 mark. There was some recovery seen from those lower levels. So your first support should come in at 11,850, then 11,800 levels. But clearly, 11,009 as well as the 12,000 call strikes have seen fresh writing in today's trade. Individual stock futures, Amara Raja has been reacting positively to the numbers. The operating performance was good. The stock's been trading above its 200-day moving average, and the gains that you've seen has also come on back of higher volumes on the cash side. As you can see on your screen, the white line indicating today's volumes versus the 20-day average on the blue line. The other stock is RBL Bank, which has been recovering quite sharply. Now remember, the stock had touched levels of 250, and from thereabouts it has seen a good recovery. It's up for the 4th straight day. In today's trade, it's crossed its 50-day moving average and signs of long seen. Equitas on the other side is witnessing fresh short position. The stock is off the low point of the day, but it's still sitting with cuts of 4 to 5%. And if you look at the futures, open interest build-up is significant right now. Last when I checked, the open interest was up about 19 to 20%. And the stock, I guess, has fallen once again after that recovery. It's down another, now 9% lower.
All right, that's what we've got in terms of the futures and options setup. Let's also begin with a global voice. Harry Colvin of Longview Economics is joining us right now on the show. Harry, great to hear from you. Thank you very much for taking out the time and joining in. I mean, from an emerging market standpoint, from specifically with regards to what's been happening in Asia and Hong Kong in particular, things getting a bit more worse as we speak. Hang Seng's been down about 2.5 to 3% odd. Does this raise a lot of alarm bells in terms of, investor approach towards this economy as a whole?
Yeah, I mean, I think generally for emerging markets and risk assets globally, we can say that in the near term, there's been a lot of strong risk appetite in the world. And it's quite normal, therefore, to see a little bit of give back in risk assets generally. And I think this is largely what is happening in some of these emerging market indices. And of course, there are always good stories to post-rationalise the price behaviour. I suspect that's what we're seeing over recent trading sessions.
So when we're taking a look at investments that foreign institutional investors are making into countries like India, while they've been missing in action for some time, we've just seen about traces of interest coming back in. Growth is sluggish, and that's not just the case with India, but I guess the world is suffering at large. What's the sense with regards to where is it going to be where much of the money starts to flow? Be it emerging markets, or do you feel bulk of the foreign money is going to still be sitting on US shores?
Well, look, I mean, we like the Indian equity market. We like a number of other EM equity markets, largely because in the case of India, there's a lot of structural strength. Demographics are very good, debt ratios are very low. There's very low exposure to the US-China trade war in India. So there are one or two emerging markets, including India, we like. But in the long run, I think the place to be investing capital is US equity markets. I think we're in a strong dollar world, and we're in an environment in which this economic cycle is likely to last many more years at least, and it's one in which we're going to see fresh highs in US equity markets. So we like the dollar, we like the US equity market primarily.
Is there a risk of some give back? Because, I mean, we've seen the US equity markets be in this bull run for the last decade. There's been no sort of a give back. The last 5 weeks, the S&P 500 has maintained its fort at being at those record highs. Is there any concern that there could be some money that could be pulled out?
Well, seasonally, the equity market's usually quite strong into the end of the year. November and December are seasonally some of the strongest months of the year. We've also got a Fed that is clearly very loose on monetary policy. And what they need to see is a sustained and significant rise in inflation before they even consider raising rates. And there's no evidence of inflation in the US economy. All of our models suggest that inflation actually, if anything, should roll over in the course of the next 12, 18 months. And I think that's a perfect setup for the equity market because it's a loose money story. And that, as you were alluding to, is one of the key drivers of this very long and this very large equity bull market that we've been seeing. I think that carries on with loose monetary policy out of the Fed.
Hi Harry, good afternoon to you from India. You said you do like the Indian equities. Do you think in terms of valuation we are still expensive compared to certain emerging markets? And if you still find value irrespective of higher valuations, which are the pockets where you think money can be made even from current levels?
Well, look, I mean, I think certainly relative to some indices, of course, India is a little bit expensive. But what we find is that valuation's not a particularly helpful metric, particularly on a 3 to 5 year view. It's useful when it becomes very extreme, and it's useful on long time horizons, say 10 years and beyond. So actually, really, I think the key driver of markets is liquidity. And at the moment, we have a number of central banks, most importantly, including the Fed, with very loose monetary policy. So, I think primarily that impacts the US equity market. That's where we'd like to be. It's also positive, of course, for equity markets like India, where even in dollar terms, we have a relatively good uptrend in the Indian equity market.
At the cost of sounding little bearish here, does the economic growth, liquidity crisis, Moody's also changing its outlook on India, is that a sign of worry for global investors?
No, I don't think so. I think a lot of the time, we get a lot of bearishness at or around the lows in equity markets. There's been lots of fear of US and global recession this year. Some of that fear's died away because the data's got a little bit better. But I think this is a lot like 2015 or 16 or even the Eurozone crisis. This is a soft patch in US and global economic growth. And as we see economic reflation over the course of the next 12, 18 months, then I think some of the high beta equity markets start to perform quite well.
In the pecking order, Harry, within the emerging market basket, where is India placed currently?
In the what? Sorry, I couldn't hear that. Can you say that again?
In the pecking order, within the emerging market basket, where is India placed currently?
Yep. Well, I think India is placed in a very strong position because it's got very low exposure to the trade war. What we see is that amongst the emerging market equities, those that are most exposed to China, for example, Chile as a major exporter of copper or Brazil as a major exporter of iron ore, have done particularly poorly, both in their equity market and their currency over the course of this year. Others, Vietnam's a good example, I would say India is a relatively good example as well. Others have done a little bit better. And I think in an environment where the trade war isn't going away, probably for some time, particularly if Trump is re-elected, then those are the kind of equity markets to be holding your exposure in.
Harry, we'll leave it at that. Thank you very much for joining us this afternoon with your thoughts. So, the global market view is suggestive of the fact that there is still more interest in the US equity markets. Looking at how the way things are shaping up out there and the anticipation of a partial trade deal, at least till the end of the year, before the end of the year, is what's keeping the risk on trade, the appetite for risk on trade pretty active out there. But, coming back to domestic markets and focusing back onto individual stocks and the kind of results that they have reported, one particular stock that we would like to focus on is a recent listing, but it's done phenomenally well in this year itself, in the last few months that it is listed. Affle India is the one that has reported its numbers. Revenues have been up about 40% at 84.7 odd crores. EBIT was up closer to 46.9%, with the margins improving as well, about 22.2%. Remember, the last time that we spoke to the management, it was in the month of September, and that time, they had suggested that a 5-year CAGR growth that they had been maintaining of about 32 odd percent is something that they see being able to carry out for the next 5 years as well. So they were very optimistic on the growth potential of Affle going forward as well over the next 5 years. Also, with regards to talking about the overall business as a whole, they said that they were not really focused on the kind of clicks that they get, but they were more focused on consumer conversion and the kind of advertising spends that come in through that. They're looking and focusing more on that front, consumer conversion. Affle India, the management should be joining us shortly. Right now, the stock's up 7.5% over the last 1 month. The stock's up about 26 odd percent. So the management will be joining us. But aside from that, 2 new listings that we had. Even Dr. Lal PathLabs is the other stock which is doing well in today's session, and the management will also join us during the show. But that stock too is up about 2.5 odd percent, 1491. Good business, niche business, and that's what the valuation that this space is getting, and not just Dr. Lal Path, but even Metropolis is getting the same kind of interest that's being witnessed. So all of these stocks, in fact, Dr. Lal has come off a little bit. It had moved to about 1560 odd. From there, it's come down a bit. but Affle is the other one that's in focus. Let's discuss the business in the quarter gone by and how things are likely to shape up with the management. Anuj, Khanna, Sohum is joining in right now. He's the managing director of Affle India. Anuj, thanks very much for taking out the time. We spoke just a month and a half ago. Can you hear me, Anuj? All right, I don't think Anuj can hear me. We'll try and patch that line back with him.
Yep, Davina, you were talking about these new listings and how they have performed. Affle's issue price was somewhere about 745, and the stock's more than doubled so far in this year. And I guess the holding company was, diluting their shareholding when the IPO came about. But there was also a fresh issue of 90 crore. We'll check with the management whether those funds have been completely deployed or not. But remember, whether there is a concentration risk or not, I guess I was just looking at the presentation. There is a concentration of 10 clients from where they get majority of their revenues, and of course they are expanding to various geographies as well. Though export revenues is not too much, majority of the revenues is currently coming from the Indian markets. But as you can see, last 3 months also, I think the interest continues even at higher levels despite of skyrocketing valuations that this company has been garnering. And I think the stocks you mentioned, be it Dr. Lal or Affle, they are all niche segments. So these are the niche segments which are getting more and more traction when it comes to the trading or the investing community, because we've been assigning higher multiples to even the FMCG companies which are doing well. But I guess now even the niche segment, the life insurance segment, continues to do well.
All right, I think we have the management ready with us. Anuj, I hope you can hear me now.
Yes, I can hear you better now. Thanks for the patience.
Anuj, talk to us about the quarter gone by. Were you satisfied? Numbers don't look bad at all. We spoke a month and a half ago, and you were pretty, convinced that a CAGR growth of 32% is something that you can clock in over the next 5 years as well. You feel you're on the right track for that?
Oh yes, absolutely. Very satisfied with the results as they have shown up in H1 this year. I think the investors were seeking this kind of an opening performance from us in the first results announcement. I'm glad that my team has worked hard and delivered the consistent growth results here. In terms of the consumer trends that are leading us to support the consistent growth is clearly that the consumers are spending a lot more time on smartphones. They are transacting a lot more on smartphones, and the average value of the transactions are going up, and consequently the advertisers across different verticals, whether it's e-commerce, OTT, travel, transport, entertainment, gaming, food delivery, government, banking, fintech, all these verticals are spending increasingly on mobile consumer data-led platforms like ours, and programmatic is becoming a key trend as well, and Affle is right with the right solutions, offering the right business model. So consequently, revenue growth of almost 40% in H1, and the PAT growth of almost 60% in H1 is obviously something I'm very satisfied with.
So what would the projection then be for H2? Does that put a lot more pressure on H2, or you're pretty comfortable to meeting or even surpassing what you did in H1?
So in H2, typically for us, it's a better time than H1 historically, and that's backed by the insight that the October, November, December quarter, the one that we are in right now, is generally a very festive season with Dussehra, Diwali, then Christmas and New Year, and that leads to the advertisers typically increasing their spends because the consumers are a lot more willing to spend in this particular quarter. So I think these trends would see a consistent lift. And seasonality in our business has always been there. So H2 is generally better than H1. And because our systems and business model is such that we have asset light and there are bottom line advantages, our OPEX will stay largely constant in H2. But because the revenue growth will be significantly more than H1, we should see better bottom line performance in H2.
Talking about your business model on the 3 use cases, that is new user conversion of the existing user, and the new and existing user conversion offline. How have all of these 3 panned out?
Sure. Thanks for that question. So yes, there are 3 use cases, but the way we see it is one business segment where we are driving conversions. The conversions can come for an advertiser from new users who had never had the app of the advertiser before, or the conversion can come from an existing user who is not using the app frequently enough, or the conversion can come not online on the phone, but it can come offline from the online to offline segment. Now, all of these three businesses, let's call it the CPCU business, the cost per converted user business, contributed over 90% of our revenues, and this particular segment alone grew over 45%. Now, when I look at those numbers, India in particular showed that the CPCU business grew over 65% in India alone, and the international markets powered by Southeast Asia or other emerging markets like Middle East Africa grew over 25%. So the blended average growth of the CPCU business, which is 90% of our revenue, has grown 45% year on year in H1. And that's pretty strong outcomes based on those three use cases.
Just going to take that point forward here. Anuj, you said average CPCU, of course, in the first half, if I look at the presentation, it's at 41.3 versus 40.1, which was seen same time last year. Can this be, can we expect higher numbers in the second half, or the growth will be the same that we've seen in the first half?
See, our focus as an organization is that we are using deep funnel conversion metrics in terms of well beyond clicks, well beyond app installs to how people are registering and converting with the advertisers in the deeper funnel engagement. So if you look at that, we have got over 250 billion data points in H1, over 2.1 billion consumer connected devices profiled around the world. And so this is just a starting point, where we are. So there is a huge volume growth here that we are focused on. So our focus is on if you look at the investors presentation, the conversions. Our focus is clearly on driving volume conversions as we go across geographies. In terms of the average CPCU, we have maintained a consistent trend line of that 40 rupees and plus minus, because what we are seeing is that we are not subsidizing our pricing for volume. So we are growing the volume, but we are maintaining our pricing and therefore seeing a much better bottom line sensible growth. So we are not a company that's subsidizing bottom line performance for growth. And I think that's the key message we want to give to all our stakeholders.
50%, nearly 50% of your revenues, they come from 10 clients, the top 10 clients. Do you foresee any sort of concentration risk? And also tell us if there were any new customers added in the September quarter.
Right. I think I'm very pleased with the way the concentration risk is being managed by my team, and also by how the industry is evolving and emerging. So there are two broad trends that have brought the customer concentration risk significantly down for us. The first one is that the denominator, which is the total revenue, is growing on a very broad basis across industry verticals, across advertisers, spending a lot more money. So since the denominator is growing faster than the numerator, the top 10 customer concentration naturally comes down. The second factor which is happening in this industry is that a lot of the advertisers are increasingly data and tech savvy, and they are wanting to, let's say in many cases, work directly with a tech platform like ours. While for us as a tech company, we value the ad agencies and the advertisers as very, very important partners, and we are neutral and best sort of partners with both of them. But naturally in the industry, we are seeing a shift where some of the advertisers are working directly while others are working through the agency. So that's also helping to bring the customer concentration risk significantly down for our business, and that trend should continue.
Just one last question. You're a recently listed company, and you guys raised money from the market, out of which 90 crore was towards meeting your working capital requirement. Has the entire capital deployed, and what's the road ahead with regard to the cash right now which is sitting on the books?
Well, thanks on that question. The capital is being used carefully. We are a cash flow positive company. If you look at H1 last year versus H1 FY20, we have significantly improved our cash flow performance from operating activities. So we are generating cash as an organization. So the working capital based usage of some part of the capital that has been raised is already being sort of utilized increasingly. We are looking at the internal accruals based cash flows being deployed selectively, very carefully, for strategic inorganic expansion possibilities, and we are evaluating whether we should enter into any of those transactions, but we will consume those capital opportunities as very selectively and at a step at a time to grow long-term shareholders value. So we will keep you informed as we go along on that usage.
All right, Anuj, all the best for the second half and the upcoming quarter as well. Thanks for joining in this afternoon. All right, from one new listing to the other, volume growth and efficiency initiatives aided a strong quarterly performance from Dr. Lal PathLabs. The top line too was aided by non-NCR markets and better realizations. Let's discuss the quarter gone by with Manchanda. He is the CEO of Dr. Lal PathLabs. Mr. Manchanda, thanks very much for taking out the time. A good set of numbers. It looks like the bottom line has been aided well by the effective corporate tax rate cuts. But I wanted to know from you specifically with regards to Swasthfit. The contribution to overall revenue fell from 22% in quarter 1 of FY20 to 15% in quarter 2 of FY20. Could you highlight that for us and the reason for that?
How much you said in the first quarter growth rate?
No, not growth rate. Contribution to overall revenue from Swasthfit.
Oh, okay. So contribution from Swasthfit is about 15% odd. This contribution is very similar to what we had in quarter 1. But we continue to see a good growth from this segment, and it remains a priority segment to drive growth. And we hope to sustain the same momentum in times to come as well.
Your core growth regions, sir, this quarter were NCR and Kolkata. Are you looking to expand in terms of geography? So this is going to continue to remain the core areas for you. And what kind of growth can we anticipate for the next quarter?
Yes, that's a good question. So you can actually divide our business into two parts. One is, of course, Delhi NCR, which is our core market, traditional market. We have been here for ages. And the second is rest of India. And historically, we have done very well in Delhi NCR. It contributes handsomely to our bottom line as well as top line. But for the last 3-4 years, in addition to consolidating our position in Delhi NCR, we have been focusing quite a bit on rest of India, consisting of rest of North, East, and rest of other parts of the country. We built a very big reference lab in Kolkata about 2.5 years back. Now, as a part of our strategy, we want to expand our presence in Western markets. We are looking at expanding our footprint into South and West. A lot of efforts are going in this direction, both organically as well as inorganically.
Realizations this quarter improved per patient. I think it came in at 687 rupees from 669 rupees. What aided this?
This primarily actually is built on because last year, same quarter, we had a lot of BTL activities. So that added to our patient base, but we didn't have much realization from there. So I think there is a base effect that is showing up here. But this revenue per patient growth rate, we don't see coming in times to come. But primarily, our top line growth will be driven by volume growth. That's the way we look at it. We don't want to really look at the revenue per patient as much as what we would like to see on volume.
All right, so volume was higher by 12% year on year. Is that a benchmark to go by for the upcoming quarter, or you could do better?
Yeah, so I don't want to give a specific guidance for the quarter, but on a long-term basis, we want to see growth rates in this similar range as we have seen.
Mr. Manchanda, I think the focus of the company has also been on sustaining the margins, and we have seen margin improvement in the quarter gone by, around about 30% versus 27.5% that we had seen in same time last year. But you also expanding now from the Delhi non-NCR region, and the margin from those areas has been lesser. Do you think that can be a threat to your overall blended margins on a yearly basis?
Yeah, I think that's a good question. And as a team, we have been focusing on this as we transition towards higher contribution from rest of India. Obviously, we have to keep an eye on what happens to margin. So far, we have managed it well. A lot of focus is going on productivity and cost optimization. And we hope to continue to sustain these margins. But I would say that it will operate within the range, and we have been indicating between 25 to 27% EBITDA margin as we go forward. But so far, we have managed our costs better. But I think you're right. As the contribution from rest of India goes up, one has to keep an eye on the margin as well.
So 25 to 27% is the guidance that you're giving us for this entire financial year, right?
No, sorry, this is not for the financial year.
Okay.
I'm actually saying more 3 to 5 5-year perspective.
All right, for the next 3 to 5 years. Give us a sense on the pricing then. I think there was some marginal prices which were, there was an increase seen in Delhi NCR region by the end of June quarter. Did it last in the September quarter? Was there any value growth seen on back of that?
It's very marginal, so it's nothing much. It's not very material stuff, but we did take a small price rationalization in Delhi NCR where we took some prices up, some prices down. But I think that impact is very marginal, so it's not really material for me to share right now.
So the focus remains on sustaining margins. The focus remains on volume growth, as you've seen. So going ahead in the second half or even the next financial year, can we expect rationalization of prices then from the company?
See, our objective will continue to remain focused on volume growth and make sure that our price value equation is competitive, remains in our favor. For that, essentially, we'll have to pass on whatever benefits we get on account of cost saving to the consumer. So that effort will continue, and as I keep mentioning that we will have to really drive volume growth to drive top line.
Correct me if one last question. Correct me if I'm wrong. Is the second half for you all weaker than the first half that we've already seen? If yes, then what sort of growth one can expect in the second half?
Generally, I think you're right. Our second half is slightly softer than the first half because Q2 is only the highest quarter for us. So if you look at historical trends, normally it's about 49.5% versus, let's say, first half, which is about 51% kind of breakup.
Okay, Mr. Manchanda, one last question with regards to your plans to grow inorganically. You've obviously completed, you've acquired 70% stake in Ameen's Pathology in Vadodara. You're also scouting for potential partners in Pune and Bengaluru. How far has that gotten in terms of getting prospects to acquire, and what kind of growth do you anticipate coming in through this inorganic route? Also, part two of the question being is the market is factoring in an ROC growth of about 35% for you in terms of an ROC profile. Do you think that's a bit of a tall ask, or you'll be able to meet it?
So I won't like to comment on ROC, but as far as the inorganic piece is concerned, this industry or this space is highly fragmented. There are a lot of unorganized players. 85% of the market comes from the single lab owners, and that's where a lot of gap is, both on quality as well as on service. And we believe that in addition to what we are already doing on the organic front, there's a very large opportunity of consolidating the market, though one can do better. But global experience suggests that the inorganic piece is one can't really turn a blind eye to this. As an organization, we are focusing on both the cylinders. We want to make sure that both fire. And in this direction, inorganic, we have done a couple of acquisitions, and we'll keep scouting for good quality assets and see how we can expand our presence, especially in South and West markets. So those efforts will continue. Let's see how it goes.
Right, Mr. Manchanda, we leave it on that note. Thank you very much for joining us this afternoon and detailing out your quarterly performance and also the outlook for the upcoming quarters. That is the management of Dr. Lal PathLabs, focusing more now and trying to diversify into different geographies, looking at the western region and the southern region aside from the presence that they already have in Delhi NCR. The stock's up about 2.5%. But let's bring in our market experts now. Time to kickstart the market wheel. Hemen Kapadia of KRChoksey is joining us right now on the show. Along with him, Ajit Mishra of Religare Broking is also there with us on the show. I'll start off with you, Ajit, on what you're doing on the index, whether it be the Nifty or the Nifty Bank. We're struggling around 11,900 now.
Yeah, good afternoon, Devina. So, Devina, yes, the struggle is going on around 12,000 mark, and basically it's a diversion between the Nifty and the Bank Nifty, which is, keeping the participant guessing. So, I feel that after that 5 weeks of consecutive rise, closer to around from 11,100, we have started this journey, and we tested 12,000 marks. So, we feel that consolidation is more likely in the near future, and we may see some, profit-taking days to come. So considering that in mind, despite knowing that the Bank Nifty is still holding strong, we prefer to take a contrarian trade on the Nifty. So closure around, let's say, 11,920, one can go short with 12,000 as a stop loss, and closure around 11,750 is what we are eyeing.
Hemen, what are you doing on the index?
I'll sell the 12,100 call option, Devina, because I've been saying from the last week.
You might as well sell at 12,000 also, because we're barely able to cross it the last few times that we did it.
Yeah, but just to play it safe, because if there is one bounce because of the bank nifty weightage, Devina, we come closer to 11,950 and I'd be worried. But I think 12,000 makes it safe, Devina. So even last week I thought we were overbought, but we did go up a bit. So same story. 11,850 we bounced thrice in the last 5 trading sessions from an intraday point of view, Devina, spot market. So sell 12.1 call. Maybe there is a small 40-30 point bounce in the nifty, maybe not. So I prefer to wait a bit till then. And whenever 11,850 breaks, you can square off that call and go short plain vanilla future, because I think we'll lose at least 150 points from there if we break 1150, but a small bounce is in the offing. But either way, sell the 12.1 call option.
Okay, and remember that's for the monthly expiry, November 28th, which Hemen is advising. But in terms of individual stocks, Hemen, what are you recommending?
The bank nifty somehow cobbling up this unsustainable move even now. But IOC, simply because it's oversold and it's set for a bounce. So buy on IOC at 133, stop loss 130, target 139. Secondly, a buy on Z Entertainment. Navneet, we are one of the few stocks which still seem to suggest that we are at least in a short-term uptrend. We've taken support on the 55-day exponential moving average. We've gained ground. Volume has spiked up today. So buy on Z. Once again, short-term call a couple of days here and there. Buy 302, stop loss 298, target 310.
Okay, so 2 buy calls coming in from Hemen, Z Entertainment as well as IOC. Ajit, what about you? What are you betting on this afternoon?
So, Navneet, considering that we are seeing consolidation in the index, we have been advising our clients also and continuing with the same bias that to maintain long and short both. For long side, Dabur, we have hardly seen any profit taking from the record highs. So this recent dip is an opportunity to go long. FMCG index also, we have seen a dip and it's reached to this immediate support area. So closer to around the current levels, one can go long in Dabur with 465 as a stop loss and 510 as a target. And cement look weak to us, so Ambuja cement is what we recommend to go short in. 206 should be your stop loss, and closer to around 190, that should be a target area.
Okay, so those are some trading bets coming your way from our technical experts. But moving on, FMCG companies are already grappling with a consumption slowdown, and the going may only get tougher in coming days. Distributors who form a crucial part of the entire supply system are disgruntled. The All India Consumer Goods Distributors Association met in Goa over the weekend. Charlene D'Souza has spoken to some of them who were present at the meet and joins us now to tell us what have they decided. Charlene, over to you.
Yeah, so distributors who are part of the All India Consumer Goods Distributors Association met over the weekend in Goa, that is the 9th and 10th of November, to discuss the issue of deep discounting in modern trade and on e-commerce compared to the general trade. Now the distributors have come to the decision that they will write a letter to the Prime Minister, also to the members of the Lok Sabha and the Rajya Sabha, and will by the 24th of November, and will also write a letter to companies asking them to look into the issue and to maintain uniform pricing across all channels of distribution. Now, if a resolution is not reached between the distributors and companies over uniform pricing that is between the modern trade, that is given to modern trade, e-commerce and to the general trade, then distributors will stop stocking up of consumer goods of all companies, of all consumer goods companies by the 15th of December. Currently, 650 distributors in the state of Gujarat have already stopped distribution of 6 consumer companies, which include Godrej Consumer Products, Marico, Dabur, Emami, Britannia and Reckitt Benckiser since the 18th of October. Now, Gujarat has a total of 7,000 distributors which distribute products for 21 consumer companies.
Right. Charlene, thanks very much for that. So we're going to keep an eye out on that particular space pretty actively. But also joining in right now on our conversation is Sameer Kalra of Target Investing. Sameer, let's talk about some big results and some big earnings and the interest and the shift to focus of some of these PSU banks, because I think today, while the banks are doing what they're doing, PSU banks are also not doing all that badly, closer to 0.5% plus for the index itself. Bank of Baroda, SBI, the kind of results that they posted, what's the reading there?
So I think results showed you one thing, that the margins are somewhere stabilizing. Let's take the credit cost which is coming up due to the slippages which they foresee in this quarter and next quarter. I think that gets accounted and the NIMs are somewhere stabilized. Secondly, if you see right now the credit growth, at least till October 11th, that was the festive season and the first tranche of the, let's say, those loan camps was there. So that is showing around 12 to 13% kind of a credit growth. So if I account for that, that's been highest since last, let's say, 4 months. So I think there is a kind of festive season bump up to the credit growth which might come in November numbers. So that might really help these PSU banks especially. But I'll be very selective and very slow in picking them up. Because if you see Bank of Baroda still facing a lot of merger issues. There's a lot of slippages which is coming out. Management changes there.
Loan growth was also muted.
Yeah, so I think it's more of being oversold and then you're seeing these kind of valuations, stabilize to a certain extent. But if I remove SBI from the pack, then I don't see any major stock to be picked out right now for an investment purpose.
Okay. What about Britannia? I mean, the stock is back to those levels that it was at before it made its entry into the index. Today's session ahead of its results seems to be losing out a bit, about 1.5% or so. But do you expect volumes here to be subdued or somewhat match what some of its peers has done?
So I think if you see Britannia is now entering that premiumization game which others had already done industry with. So Varun Berry really took last couple of years to push a lot of cookie brands into a higher market share kind of system. So that should help the volume of the premium end. On the basic end, I still feel there will be issues on the volume growth. The margins might face a squeeze as compared to, everyone else in the food category is facing. So I think margins will be muted, but volumes can come as per expectations or maybe surprise to a little.
Okay, that's Britannia for you. They will be reporting their numbers. Remember, the street is expecting a volume growth of about 3%. And the recovery that you've seen for this stock, there were a lot of negative news also floating around with regard to how Varun Berry could resign. But of course, those rumors have been denied, and post which we have seen a recovery coming by. Also, watch out if they give any sort of commentary with regard to the ICDs that they had given to the group companies. I think that was another reason post the March quarter numbers. We had seen a big correction coming in from a company like Britannia. But moving away from that and focusing on a couple of your earnings from the mid-cap as well as the small-cap space, which are doing well. Pull up Kitex Garments. This one also came out with the numbers, I think, Friday evening or on Saturday, and the stock's up about 14 to 15%. It gave you a net profit, bottom line growth of nearly 46%. The other one is SL Proprac. I guess that's locked in upper circuit with gains of 10%, bottom line growth of nearly 12%, top line growth of 7%. Samir, if you got a chance to look at these companies, are they good investment bets after looking at the numbers?
So I think SL Propack, due to the SL Group kind of a fiasco, the valuations really dragged down. And when the justification came out that they don't have any relationship, I think number-wise, SL Propack is better than Kitex. And I think even the business and the monopoly towards the market share which they have and the products which they have, I think that really helps the valuations, and I feel there is a 30 to 40% kind of a upside there.
Okay, the other one is Amara Raja Battery. I want to get a technical check on this one, considering there is a lot of action, be it on the cash side, the stock's gone up in good amount of volumes, or be it on the derivative side. It's one of your top F&O gainer. We've seen huge amount of build-up coming on the futures of Amara Raja. Hemen, it's trading above its 200-day moving average. It's been an underperformer for the longest time. Taking today's move, factoring in today's move, would you recommend taking any position on the upside?
Yes, Navneet. Excuse me. It looks like a double bottom, but I'm not sure if 2 weeks quantifies as a double bottom. But yes, we went to 650, went to 695, went to 650, and now we crossed 695. So technically, it's something like a double bottom. So coming back to your main question, yes, it looks worth a trade. We posted a fresh 5-week high, Navneet. And surprisingly enough, even the monthly mechanical indicators are turning positive. So short, medium, long term stock is looking better. we spiked up quite a lot. So we are at 706. I think closer to 695. I think the risk reward ratio should be decent enough to take a long call down it.
Okay. The other one also that reported its numbers today was Motherson Sumi. Above expectations, revenue grew by 6% year on year, while the EBITDA was up about 5% at 1355. Profits came in higher by 4%, while margins were stable. Not too much of a change out there. However, the stock from mid-October has actually gone up 30% plus. So had gone down to levels of 100. From 100, it's bounced back to about 133 odd. Sameer, what happens to Motherson Sumi now? And then I'll probably get a technical check as well.
So I think the subsidiaries are performing better than what analysts expect or even the company expected out. So if you see the PKC acquisition, that has really helped the numbers to outgrow the estimates or the usual growth patterns which they were showing. So I think that really pushes Motherson back into the foray, but I'll still be very cautious of it. I would still like to see global numbers because globally auto companies are facing kind of a recession, if you can technically put it out. So I think Motherson can show you these bounces, but overall I'll still wait for the balance sheet to reduce the debt.
All right, so it's a decent enough recovery actually in the last 6 months. While you've not got phenomenal returns, it's given a complete comeback from the lows that it hit. And in fact, we'll be getting the management on board with us at 3 o'clock this afternoon, just about 15 minutes from now. We'll get to hear how the quarterly performance of Motherson has been. But Ajit, I want to come to you on the charts for Motherson. Is it looking a little overbought in the short term?
Yes, Devina. So after this, up move from the last 5 weeks, the stock has moved up roughly from around 95 to the current levels. So we may see some consolidation, but the positive thing is that it's currently, trying to sustain above its crucial 200 days moving average, exponential moving average. So it's indeed a positive sign. And in that case, in case if it manages to sustain above the same, then it can inch towards 145 to 149 levels in days to come. But considering the past instances that we saw that profit taking coming in, so 126 should be a strict stop loss in case if we are having any trading position, and plus we have results also, the volatility will remain high.
All right, keeping it with this space and then probably just widening the scope a bit to include auto OEMs. There are green shoots emerging on ground for the auto sector. That's the word coming in from V.S. Parthasarathy of Mahindra & Mahindra. In a conversation with Yathin Mota earlier on in the day, Parthasarathy explained why he expects the second half of FY20 to be better than the first.
Monsoon has been 110%. Reservoir levels have been the highest it's been for many years. The infrastructure, rural infrastructure and rural project spend has started to happen. So all good signs for growth. So therefore the quarter 4 should look good. We are currently in quarter 3 starting from where pickup is, and quarter 4 should be good. So it augurs well for the industry. How much growth, what? It's a matter of how fast this turnaround happens. And I'm very hopeful that there'll be a turnaround and there'll be very good demand pickup. So that's based on the facts that I mentioned, and also based on the fact that I'm positive with what I'm seeing at the ground level.
Okay. So one quick question on the UV segment and the automotive segment. What kind of growth do you see moving ahead? The situation has been challenging in terms of market share, in terms of the overall demand in the marketplace. How do you see the overall auto pie with respect to the domestic market as well as exports?
So 2 parts actually. We have improved market share both in PV and the overall auto industry. And I think there's a momentum going in for us, and we would like to continue that momentum. 2nd October for the industry as well as for M&M has been good, and we hope that the momentum continues. We'll have to wait for November before we can say that it's now a trend, but there are some very good green shoots that we are seeing at the ground level. BS6 will remain a challenge because it's not so much a technology challenge as it's a logistics challenge, or it's both a technology and a logistics challenge, and I think we will try and meet both. We are very well prepared and very well planned. So we will come out on the right side of this one. So we are looking to with a lot of hope the future when it comes to auto sector.
Okay. And so for exports, quickly, if you could just tell us.
Yeah, exports, and I will stop there if you don't mind.
Yeah,
I have to be excused.
Sure,
so exports, I think the markets have been slightly low, but now with the neighboring markets start to settle down, Europe, Africa is doing very well for us, and some part of the markets picking up. We should also see our exports doing well in the medium term. Yeah. Okay. This quarter I can't comment. It's too early, but I think there is recovery in these markets I can see as well. So export should do well.
Okay, that's Mr. Parthasarathi of M&M, who feels that second half could be better for them. But let's close the loop here, Sameer. But do you expect second half to be better for the entire auto space? I'm not looking at the bottom line growth that was boosted because of lower tax expense. But in terms of operating performance, iSure, M&M, Auto Anks, Motherson Sumi, or for that matter, even battery maker Amara Raja, they all have posted better than expected operating performance, at least what the street was expecting. Do you think the worst is over, and going ahead one can start expecting margin expansion, or it will take time?
So I think it will take time because if I see November registrations still yet, what has happened, they've gone flatten out now. Now if the dip comes in November as compared to even October or maybe September, which was pre-festival, so I think it's better to use this bounce and lighten your positions. I rather take it as an exit opportunity rather than entering it, because see, when companies like Maruti, who have the largest branch network and they have largest dealer network, so if they come out and issue a kind of a warning globally, see, they have not done it locally.
Suzuki has done that.
Yeah, so Suzuki does it globally. Then there is certain things which might come as a bounce for a month or two. I'm not denying that. But what has happened, everyone estimated it to be really bad for this quarter, which was September ending. Now my worry is everyone will expect December quarter to be very good. so when the estimates go the other way, then the actual fall kicks in. So I think this is a better place to exit, see the November numbers, take an opportunity to exit out, even if you see them 10% or 15% lower than what they are right now. But I think use that and re-enter when the whole system regenerates that place.
Okay, so lighten your exposure in autos as and when you get better prices is what Sameer is advising. Hemen, I just want to take a chart check on two stocks, and they are high beta stocks. You have been risk averse in the recent past, but would you bet on something like Yes Bank and RBL Bank? Both of them have been bucking the trend in the last few sessions.
Hemen's thinking.
You can take your time.
Yes, I think, Yes Bank.
Tricky spot.
Yes, it is tricky, but we're at 70 to 85. I would need to keep yesterday's Friday's intraday low underneath of 64.30, which is, I think, slightly far away, but that is a stop loss. We walk into a roadblock at 80. So we have headroom till 80, and if it takes out 80, then yes. RBL, I was bullish. In fact, I think I had a buy call on RBL a couple of weeks back on the show, no need. Currently, we've moved up from 230. There is some more headroom left. I'm not saying there's too much, but yes, is it worth the trade after this move? I'm not very sure. Some more headroom left, but yeah. So if you look at Yes Bank and RBL Bank both, like I said, high risk, but yeah, some upside possible.
A few other stocks to keep an eye out on. Obviously, we spoke about Z as well, and that's Hemen's pick as well. He's got a target of 310 on the stock, but already at 303 right now. A few other names like ICICI Bank making its approach towards that 500 mark. That's going to be a milestone for ICICI Bank if it's managing to take that down. Ajit Mishra, what would you do with ICICI Bank?
So, considering that's trading at the record high, I would prefer holding my longs and keep filling the stop losses on every rise. So, the private banks is what is basically keeping the hopes alive that the Bank Nifty could manage to cross this level of closer to 31,150, which it tested earlier, and can retest the highs closer to 31,650. So, ICICI in the private banking space is leading that pack. So, considering that, obviously it's a buy on dip candidate, and for the existing long, closer around, let's say 480, 85, that should be a stop loss, and upside is open.
Okay, the other one I want to look at is Inox Leisure. The stock's trading under by about 0.5% in today's session. Good numbers. We've been talking about how the strong movie content pipeline has been aiding most of these exhibitors. PVR is also the one which had, from a yearly standpoint, both of these stocks have done really well. Today's session, so PVR is up closer to 1% odd or so. Inox, in fact, had gone all the way up to about 385, I believe. From there, it's come down a bit. So this year, it's up cumulatively about 50%. But is this a space you would like to be in?
So yes, because if you see the consumption pattern, they are defying the consumption slowdown in a sense. And I think Inox will be better off than PVR. Because I think if by numbers I go, Inox is right now what PVR was in 2016 and
24, 25 times,
yeah.
Which is not bad.
No, even in terms of business and the screen movement, number of screens, Inox is right now placed at where PVR was in 2016-17. So it's still 2 years catch-up which they have to play. So that's why the difference between the valuations still exists. They're catching up very quickly. And the premium level of Inox is really pushing up the margins and helping the F&B business margins as well. So I think over there, for me, Inox will be a much better, let's say, a SIP investment right now, because you're buying it at a top. So there are certain risks of 1 or 2 quarters slowing down. But I think right now it's better to put a SIP in Inox.
3-year story?
Yeah, maybe a 2-year, 3-year kind of story.
Okay, that's about the exhibitors. Pull up BHEL, pull up Dixon Technologies. Remember, tomorrow is a holiday. These two companies come out with their earnings on Wednesday. So 4% higher for BHEL. The gains have just come in the last 15 to 20 minutes of trade. Dixon Technologies, just about 48,000 shares being traded. But even with this quantity, the volume is really on the higher side if you compare it to the average volume of last 20 session. Hemen, looking at the charts, the numbers come out day after tomorrow, but some trading activity seen in the last 15-20 minutes of trade. Would you take a bet?
It's already moved 9%, Navneet, today. It looks good, but I'm not sure if it's worth a trade after a 9% move. But like you said, the volume activity seems to suggest that the result expectations could be good. So not bad, but after a 9% move, I'd prefer to stay away.
What about BHEL?
Okay, BHEL seems relatively better. We had a spike, and after that we've consolidated sideways for 5 weeks, Navneet, and now it's beginning to look better. An upward bar reversal coming in today. I have a feeling we are at 56, 55, a close above 58 followed by 61 should see some more upside. And I think a strange thing has happened. The way I see it, after almost 18 years, we've seen a volume of 64 crores last month, Navneet, in BHEL on the monthly chart. This is gross, not delivery marking, but that's absurdly high and ridiculous. So I believe stronger hands are bought because those levels have been protected. So keeping that in mind, I would be more positive on BHEL.
Okay, Sameer, a quick thought on something like Nestle. Margins were not good, raw material cost was higher, and also Titan. I'm just going to mix it up because they are good quality stocks which have corrected post numbers. Would you venture at lower levels?
So I think again, consumer staples, I always bet that it's better to do a SIP because the valuations every time looks expensive to you, and even a small disappointment in margins or any volume growth really knocks down the stock. So I think Nestle I would still prefer over a Titan right now, and I think for me Maggi, the way they've come back in terms of Maggi volume growth, how they are expanding that product line, and even the chocolate side. So the chocolate side margins are improving, their premiumization over there which was long lasting. So I think this really helps out Nestle to improve the margins going further, but I think there will be a 2-quarter blip for raw material cost increase.
And that's what weighed in on the gross margins for Nestle this quarter as well. The stock, one of the poor performers of the index. Keeping it with earnings then, Motherson Sumi, the management should join us shortly, but just want to quickly once again run through the kind of performance that they posted. So came in above street expectations, and which is why you're seeing the stock doing what it's doing. Revenues were up 6%, profits were up 4%, EBITDA was up 5%, margins remained stable. There was no major dent that came in for the margins as well. Yatin Mota caught up with the chairman at the company, Motherson Sumi. Let's listen in.
The key message that I would like to give is that yes, things are going to look up, things are going to become better, but God forbid, even if it doesn't, our results are going to be definitely better. Our teams are working very hard to ensure that this is the last 6 months of our 5-year plan, and we all sign off this 5-year plan with a very good performance. And I think it's pretty evident, even though the markets have been what they have been, our results are showing that all the teams, in fact the board actually congratulated all the workers, all the teams in the group for delivering such excellent performance with such adverse conditions. So I think the coming 6 months also, we don't see any major capex unless we do an acquisition. And other than that, everything looks perfectly following the plan that all the companies had made, where the last year is always the year where they consolidate everything and put a very good performance in front of our shareholders and all the stakeholders.
So in terms of your order booking, sir, it is almost 1.43 lakh crores at SMRP level. If you talk about the European business, the US business, the New Mexico plant, overall put together, do you think this number should look up moving ahead? And more importantly, since your new plants are coming online, do you think the growth momentum would continue for the next 3 to 4 quarters?
Oh, definitely. I think in March 2020, our 5-year guidance will be over. And this particular order book has remained same or has actually improved a bit. So that shows that there is a lot of traction which we have from our customers. And that also explains the new plants that we've set up. We've set up 35 new factories in the last 5 years. So, this whole particular way of trying to show to the market that a 5-year guidance has much more relevance than quarter on quarter is something that we have done for the past 4 times already, and this is the 5th time. We feel that yes, there is going to be more growth because all these orders are going to be fructified into factories and manufacturing which we are supplying to the customers. So yes, and plus we are winning a lot of orders coming from our customers. With this 6 months, we've added 3.8 billion euros on our top line for order book, which tells you that there's so much more opportunity there in the market.
Okay, and sir, talking about PKC in specific, we have seen a fantabulous operating performance. Of course, the top line growth was also in double digits. What have been the growth drivers for PKC, and do you think moving ahead you could maintain that operating margin performance?
Oh, definitely. I think we have no doubt in our mind. PKC is an amazing company. They've integrated very, very well. And believe me, they are also facing their challenges. But just look at their numbers. They've done such a phenomenal job, 12% on the revenue and 73% growth in the profitability. So we expect them and MWSI, both these companies, to do even better in the coming times. Because they are getting more organized, they're getting and following all the things that we are asking them to. So plus a stupendous performance from there, all the management and the workforce and the associates and everybody. So really, congratulations to them.
Okay. And sir, one final question on your net debt level. We have seen, of course, a strong improvement on a year-on-year basis, nearly 2,500 crores down on net debt. However, if you look at it vis-a-vis March, the start of the year, financial year, the net debt has gone up. In terms of your expectations that, probably next 6 months, 12 months down the line?
It's marginal, and that much, in multiple currencies in the world, it's marginal. If you really want to talk about it, I can talk about it. But think about it. We are dealing in over 41 countries. We are dealing with different currencies. So, thoda sa, in translation, it goes up. In actual amount, probably it might have gone down.
Given the fact that you are sitting on strong order books and the growth prospects look up, do you think the repayment would be also quite strong? You have already demonstrated that on a year-on-year basis. But moving ahead, do you think the debt reduction efforts would be quite strong without any acquisition and no capex?
So I think operating a $12 billion dollar company globally, there are different nuances in different countries about the working capitals and things like that. So if you think about it in that context, you'll agree with me that it's not really something very big. And in any case, for acquisitions and all that, if we do it, it might peak up a little bit, but then eventually we will make sure that we have long-term this thing. Either we'll dilute our equity or we'll do something which will make sure that the company is not overburdened with any interest costs and all that. And by the way, our interest cost is less than 1%. So really, we don't think that is a huge issue with us.
All right, that's the management of Motherson Sumi commenting on their September quarter numbers. The stocks recovered just not today, but in the last 5 to 6 sessions, and we have seen good operating performance so far. This stocks around 134. But having said that, Nifty's reclaimed the 31,000 mark in trade, and also recovery seen for Nifty Bank, by the way, has reclaimed 31,000 mark, and Nifty's reclaimed 11,900. We're in the green for Nifty as we speak. Good time then to bring in Sharad Dubey and find out which are the Fab 4 stocks that he's tracking today. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Amara Raja Batteries. This stock is up more than 8% after it came out with a strong set of quarterly numbers. The margins expanded by almost 370 basis points to almost 17.2%. This improvement was supported by a lower lead prices and also a better mix seen across product segments. And even if you see the segments, there was a healthy growth seen for the replacement as well as the industrial segments. Up next is Narayan Hrudayalaya, which is up almost 5.6%. That also came out with a good set of numbers, and the profit rose almost 3 times to 45 crore rupees, and the results were above estimates. Now, if you see, there was an improvement was seen both across the domestic as well as the Cayman hospital, and also improving utilization was seen in India, which was aided by a strong operating leverage. And up next we see is AstraZeneca Pharma, which is up almost 3.5%, and this also is rising based on the quarterly results, in which the margins expanded by 500 basis points to 16.1%, and the EBITDA rose almost 2.3 times to 66 crore rupees. And the last stock of the day is RBL Bank, which is up more than 5%, as we see fresh longs being seen with a high open interest of almost 30%, and the volumes are trading almost 2 times its 10-day average. Back to you.
Right, Sharad, thanks very much for that. So those are the Fab 4 stocks this afternoon. I want to also pull up a JSPL. The stock over the last few trading sessions has given phenomenal returns. The stock is now at 150. The way it started to move up from levels of 100, 105 to 150 in a matter of 7 days, that's a 30% bump up on the stock. Ajit Mishra, does one take off profits in this counter?
Yes, certainly, Devina, as you rightly mentioned, that the stock is up around roughly 30% in this month so far, and it has almost reached its critical hurdle of closer to around 150, 152 mark. And plus, the metal index also looks slightly, in a consolidation bias. So, considering that the other counters are still, consolidating, they are still hovering their below their resistance levels. So, it's best to book profits and wait for any dip around, let's say, 140-45 zone to re-enter.
50% in the last 1 month or so. So this has had a roaring rally. Fundamentally, the only 2 things that have changed are 2 hearings which have been given in favor of JSPL, that works in favor of JSPL rather. Does it change things materially for this kind of enthusiasm to come back?
So I think it runs more on, the favored judgments to them. But I think on the numbers, if you see the numbers, there is still pressure on the demand. And I don't feel that the demand will revive anytime soon, because the auto sector is still facing, which is the largest customer, single-handedly is still facing an issue, and construction side is still down. So I think materially, quarterly numbers, I don't see any change in next couple of quarters. And I feel the debt levels are still the main concern for them. And the cash flows are going, even as per the September quarter release, cash flows have still deteriorated. So I think it's better to stay away, or if you have, exited out.
Okay, that's JSPL. So the last 6 months, the recovery has been there. You've seen the stock actually come off from the lows that it hit in the month of August and then stayed there for at least 2 months, after which it started to move up. Coming back to some of these other names, and Ajit, since we were talking about Maruti, I think we got views from Samir on Maruti on the fundamental side, but on the technical side at 7,100, I mean, there was a tactical opportunity when the stock went to 5,500, 5,600. But do you feel that now it's the risk reward may not be in the favor of the trade?
So, that after recently testing that 7750 mark, we have seen the stock retracing again back to the level of closer to around, let's say, 7150 today. This level on short-term basis at least looks very favorable for a fresh short, long. And but yes, at the same time, since we are seeing mixed performance in the auto pack and we are seeing excessive volatility at the same time, one should be very specific when it comes to trading to the auto counters. So in case if you wish to go long in Maruti at current levels, 7,050 should be a strict stop losses, and clear to around 74, 74.50, one should book profits if it's a short-term trade.
Okay, that's Maruti, which has been falling for last 6 trading sessions. But one stock which has moved higher is BPCL. That's up about 3% right now. And I guess there is cabinet meet on Wednesday. And remember, the street's been talking about how government could be looking to divest its stake, and not to an Indian player, but also to an MNC player, which could lead to re-rating of the sector, which could also lead to a better valuation for the entire oil marketing space. Samir, not sure if it's going to get discussed in the meeting or not, but still the sort of gains that we've seen, just not today, but on back of this news, what did you make of the numbers, because they were weak for all three? We've seen the GRMs to be on the lower side. Would you take a bet, and what sort of announcement will provide further fillip to this space?
So I think even if there is an announcement, it will be mere approval of going ahead and doing the road shows and then getting in the EOI. So I think this is more like a formal approval from the government which will come in. This really doesn't change the eventual path of divestment, because for me the EOI and the bids which come in, that will be the main game changer from my point of view. Till that time, I don't think so it becomes an investment bet for me. And OMCs, I'll stay a little step back from there.
Okay, still skeptical about the space, but Z Entertainment is up. It's trading above the mark of 300. Ajit, would you take a bet looking at the recovery that the stock has seen in the recent past?
So, Navneet, yes. In fact, I guess Hemen have already recommended to go long in the stock. 310, 312 is the immediate resistance area for the Z. But in case if it manages to take off the same, then this rally can extend further, considering the kind of pessimism that we have witnessed in the stock in recent past. So above 310, 312, we can see the stock inching towards 340, 345 level also. So for the fresh longs, one should be very strict with the stop loss, considering that we have already seen a decent surge. So 290 should be a stop loss, and above 312, as you said, 340 should be a target area.
Okay, that's the technical view on Z, which is moving higher in today's session. On the weaker side, you've got stocks like Indigo. I think right from the word go in the morning, there's been some bit of selling pressure. That's sitting with cuts of 3%. You've also got something like Pidilite, Havells, or for that matter, even SPR Life is witnessing some bit of profit booking in today's trading session. But it's time to take a look at what the dealing rooms are recommending. We're joined by Yatin Mota as well as Darshan Mehta with your channel checks. Good afternoon to both of you. Darshan, session. You go first.
Good afternoon. Fortis Healthcare is one of the stocks that's been spoken today. It's up almost 4% on decent volumes. Almost 7 million shares have already been traded. Some of the HNIs are actively accumulating. They believe that there could be some bit of news that would come in on the open offer by IHH, which would be allowed by the authority. So on that anticipation, there is accumulation that's happening. The other counter that dealers are talking about is BPCL, pretty much trading near the day's high. It's up almost 3%. Dealers believe that this week around there could be the final divestment meet on BPCL. There could be some bit of further color on what's happening. There was a lot of noise and then suddenly it fell silent. But again, there is the buzz that there something could happen this week. And finally, the last stock is ICICI Prudential Life Insurance. This was one of the counters which got included on the MSCI India index, on the MSCI inclusion. While most of the other counters did rally, ICICI Prudential over the past few days has been moving on a very slow and steady manner. And dealers believe that over the next few days, slow and steady accumulation due to the MSCI buying will take the stock much higher. But Yatin, what do you have?
Well, RBL Bank is one stock which is moving quite sharply in trade. Dealers do indicate a buy today, sell tomorrow kind of a strategy based on FNO trends. So watch out for these smaller private sector banks, the likes of Yes Bank, RBL. All of them are quite active in trade on the positive side. Z also is one stock. A few moments back we were already discussing the stock. 6% up on that one, and dealing rooms do indicate that there is a lot of domestic fund interest for trade today. In fact, almost 2 crore shares traded on Z. So the volumes have been extremely high on Z today. So let's see whether or not there is some further action in the stock price. And finally, GSPL is also one stock, and even at these levels, HNIs are said to be buyers according to the dealing room check.
Hi, Jatin. Thanks very much for that. So keep an eye out on those two counters. Z, JSPL, both of them active in trade this afternoon. What's looking weak is Avanti Feed. Should also look at an Apex Foods and Waterbase. This group of stocks were active in the last few trading sessions. Apex Frozen Foods still doing okay, just about 0.5%. Waterbase is lost at about 0.5%. But Avanti Feeds is down about 8.5%. Raymond, which saw the upper circuit getting hit on Friday session, has given back today by given back about 7.5%. And Equitas on the back of disappointing numbers down about 6.5%. Hemen, Avanti Feeds, you track this one, 506.
Profit booking, 20% in the time frame that it has gained. It can't sustain. It's moved really sharp. But yeah, the medium-term picture has improved, but I don't think it can sustain like this. This move is on from 340, Devina. So I think it's a breather. The underlying trend has turned positive. But currently, I think it's overdone. We are on the verge of giving a downward bar reversal today. And I think the sell-off has happened a couple of days back. Yeah.
How did you read into this whole demerger for Raymond?
So I think it's positive for the shareholders, but I think eventually the cash flows go away. And when you do a real estate project, the cash flows become more important for the whole system to run up. So I think one company will be heavy debted and the other will be a cash flow generating firm. So right now, if you see, the whole system of development was always on the base that the cash flows will be used from the Raymond consumer end. And now if they regenerate what kind of cash flows from where, that is yet to be seen. So I think I'll stay away from this rather than
Okay, Raymond's off 7% today. 750 is the mark where it's currently trading. Pull up Tata Motors. I think there is some bit of bump up in the last 5 to 10 minutes of trade. That's seen gains about 1.5%, just almost 2%. Hemen, what do you make of the move on Tata Motors at 172? Would you take a bet?
Tata Motors, yes, top loss 167. If Ashok Leyland can move, why can't Tata Motors? That's my logic.
Yes, the numbers were bad of Ashok Leyland, but there is some buying seen, of course. But also remember, by the way, Ashok Leyland has been an outperformer. And after an opening in the red, we've seen recovery. So there was some buying seen at lower levels for Ashok Leyland. But Ajit, I want to ask, if somebody had a long position in Amara Raja, it's up 9 to 10% currently. Would you advise booking profits or taking home the position, wait for higher levels?
So definitely wait for higher levels because today the average volume for 10 days is roughly around 10 lakhs kind of share, and today we've crossed 50 lakh share mark already, and it's trading at the record high, the day's high. And plus it's crossing its long-term moving averages on the weekly chart also. That clearly indicates that bias clearly in the positive side. So one should definitely hold the longs. Upside clear around, let's say 740, 760. That should be the area where one should book profit in case it is a short-term bet. Otherwise, they can hold this long.
Okay, that's Amar Raja for you. It's at 716, up about 10% right now. We're just about 10 minutes shy of market closing. Remember, it's a truncated week. Tomorrow is a market holiday. We come back on Wednesday. So what can we anticipate as we step into trade on Wednesday? Let's get into some closing ideas from our technical experts. Ajit, I'll come to you first.
So we've seen an uptick in banking and the closing tick. So that clearly shows that private banks will continue with this uptrend. So Axis is a candidate where one can definitely consider fresh longs. And 725 should be a stop loss, and close around 760, that should be a target area.
Hemen?
I have a BTST on Kotak. 9% long build up, Devina. BTST on Kotak Bank.
Okay. That's Kotak Mahindra Bank, 1616 is where the stock's trading at. A quick take, Samir, from you on ICICI Bank at almost 500 now.
So I think it's again driven by more of MSCI rejig flows. And these kind of rejigs become much more heavy on once they're over. So, and because the valuations stretch in that process. And I think it's still a couple of days or a couple of more days where the flows will come in, and it might cross that 500 mark also. But I think if you see ICICI and Axis, right now I feel Axis is a much better placed bank in terms of the scope of improvement on the upside, and the valuations of subsidiaries still not being discovered by the market as such. Because if you see on the ICICI side, ICICI Pru, Lombard, ICICI Securities, all are discovered subsidiaries. So I feel Axis has a much more scope in next 2 to 3 years rather than ICICI.
You know, one more inclusion which has been doing good is DLF. The stock's been giving you returns, I think, for the last 4 weeks. If you look at the sales booking for the first half, it's up 16%. I know this is once again a very high beta counter, but the emphasis that the management has been laying with regard to deleveraging, do you think it's paying off?
So I think in last couple of years, it's changed the way the mechanics used to work within the commercial end to the company. And I think that has really helped out now the value discovery in the firm. And if you see Gurgaon, NCR and Delhi region, there has been a lot of changes under the weather. And now the execution is coming along. So the residential part has stopped almost totally, and they're only giving out completed projects. So that really helps their cash flows to be maintained. And I think it has a scope to move up, but the recent run-up has really stretched the valuations.
Okay, that's a DLF for you, which is holding up in the green today, up to 2.5%. Remember, the low for today was 11,850. So once again, index took support at 11,850 levels. There is renewed buying interest, which has come back. 12,000 once again remains a very key level to be watched out. But your heavyweights like TCS, they're still in the red. Ajit, TCS since the morning session has been, seeing some bit of selling pressure. It's still down 1.5%. It weighs on Nifty. At current levels, where is the bottom for TCS? Would you recommend taking any fresh position here?
So, Navneet, after retesting record high, we are seeing that it's inching lower every passing day, and I feel that downside later on, let's say 2040-30 zone, is what this stock may test in days to come. So, considering that, one should wait for further dip later on, let's say 2040-2050 area. To initiate any fresh long, and I would prefer going long in case somebody wish to go in IT. Tech Mahindra is a better place candidate.
Okay, Tech Mahindra is better placed than TCS. Samir, before we thank you, anything from the IT space or any of your top pick looking at the earnings for the September quarter?
So I think TCS for me has come down in certain extent to the valuations, and I think cash flows, and if you see the corporate governance, and if I give every positive to it, then I think TCS is right now a better bet as compared to Infosys for me.
Okay, Samir, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on the markets. Your top F&O loser is Equitas Holding, and of course, this one is reacting to its numbers. There is heavy short build-up which has come in. It's touched a 52-week low. In fact, BloombergQuint spoke to the management. The slippages which have come in from the CV side of the business, which constitutes nearly 30% of their book. And as you can see on your screen, 19% higher with regard to OI build-up. Hemen, already 6 to 6.5% lower. What do you do with Equitas?
Equitas, after such a, we've, frankly speaking, only every bounce has been sold into. We've continued with the sequence of lower tops and lower bottoms. We peaked on 14th June, week ended at around 144, and since then we continue to sink. But fresh short, I am not sure, but it definitely looks weak. No, I would stay away. 103 to 88 in 3 trading sessions. No, I think a bounce is in the offing. Maybe it will not sustain though.
All right. The sugar as a pocket is doing well, exceptionally well in today's session. Sri Renuka, Bajaj, Hindustan, Shakti Sugar, all of them sub 10 rupee stocks. But they're doing well. But Rampur Chini is flat, but the ones that I mentioned, they're all in double digits. Sri Renuka is up about 18%. You've got Bajaj Hindustan, which is up 15%. And then you've got a Shakti Sugars, which is up about 10-odd%, closer to 10-odd%. So doing well. Dish TV is now up 9%. So that's 15 rupees on Dish TV. Ajit, Dish TV?
So yes, we may see this rebound extending further, considering the kind of buying interest that we have witnessed in stock closer to around, let's say, 10-12 levels. So, but we have better counters to trade in. So, in case if somebody is stuck, use this opportunity to exit closer to around, let's say, 15 to 16 levels, and switch to the counter in the private banking space for the safer bet.
Okay, that's Dish TV. And your e-commerce company, India Mart Intermesh, has just gone up by 13 to 14% as we speak, 12% higher as of now. And of course, it's been trading in the positive territory. Last 15 minutes, we've seen some more buying coming in there. Hemen, on the charts, its all-time high levels are somewhere at 2,300. At current levels, with today's move, it's come with 2 lakh volumes. What does the chart suggest?
First basic observation, Navneet, would be that the move from 2300 to 1725 is over. We've taken support on exactly on the 55-day exponential moving average for 2 days in a row. Now we've reversed. Cash market volumes are 2 lakh, highest volume in the last 20 days. 1958 on a 40 rupee. In case of a decline in trade, I think it's a buy because it looks set to resume its move.
All right, gentlemen, stay on with us. We'll come back to you for your closing comments, but let's just start wrapping out how the markets are doing this Monday afternoon and how they're likely to close. So we've got an extremely flat day on the index, but this is not bad because, we've come off the day's low and we're going to probably end the day marginally in the green above 11,900. Nifty Bank has, given a great performance today, about 400 points higher on Nifty Bank, 31,150, though, its high is still some time away. We're closer to about 31,653, which was its high, so we're still some time away for that. Mid-cap index doing okay for itself, about 0.5% higher, while the small-cap index ends the day absolutely flat. Talking about individual stocks on the index and how each of them performed, we've got the gainers first in Z. I had a sudden spurt of interest in the last 1 hour of trade, and the stock is up 6.5% by close. Yes Bank, another day where you've seen interest building up, 5.5%. Remember, ever since we got the news of Rakesh Jhunjhunwala picking up stake, the stock has started to move up. BPCL is up about 2.7%. GAIL is up about 2.5%. Tata Motors, IndusInd Bank, Axis Bank are some of the other gainers. Amongst the losers, Nestle is down the most, about 2.5%, followed by Hero MotoCorp, Vedanta, Hindalco. So metals as a pocket looking weak, and then some losses coming in from Reliance Industries. This could probably be the largest point contributor in terms of the losses today. But if that's the case of the large caps, I believe broader market space also seems to be very stock specific.
That's right, Davina. It's a divided house where you had gainers, you also had losers. Let me begin with the gainers and companies which were reacting to their numbers today. And I'm going to start off with Amara Raja Batteries. Good operating performance. In fact, the margins have been improving for this one in the last 5 quarters. It's closing at day's high, so everything going well. Technicals, fundamentals, it's gone up on good amount of volumes. Futures saw a heavy build up on the long side. So let's see whether this buying momentum can continue or not. Motherson Sumi came out with the numbers. The operating performance was better than what the street was expecting. They posted margin of about 8.3%. HDFC AMC buying interest continues for this company, and the stock today was up about 5%. It's closing at day's high. Kitex Garments, a small cap company which came out with the numbers, did see bottom line growth of 45%, 14% higher. SL Propack also reacted positively to the numbers, 12% bottom line growth, 7% top line growth. This one also was up 8 to 9%. Actually, it's locked in upper circuit now towards the end, up 10%. RBL Bank, the recovery continues, and on the future side, we've seen trends of long positions now being created here. And BHEL comes out with its numbers on Wednesday, day after tomorrow. Ahead of that, we did see some buying coming about, tomorrow being a holiday. On the losing side, AkzoNobel posted its numbers, and the stock saw steep correction today. In fact, this is one company from the paint and the coating space which has been underperforming its peers. It's largely a coating company, down 9%. Equitas Holding not posting good set of numbers. The commentary also did not help. Avanti Feeds, which was moving higher last week, saw some bit of profit booking in today's session, so that was down 7 to 8%. And stocks like Indigo, profit booking seen. Raymond also witnessed profit booking. It fell by about 7 to 8% in today's trade, Davina.
All right, so that's what you've got with regards to the broader market wrap out. For the equity index, the main indices, Nifty Bank shutting shop with positive gains 1.3%, a good 400-point bump up in intraday trade. PSU banks doing particularly well. You've got Nifty closing with marginal gains but above 11,900. Sensex also posting marginal returns. Coming to the individual point contributors then, and what did well and what didn't. ICICI Bank contributed about 12 odd points, followed by HDFC. And remember, Reliance Industries down 1.25%, contributing to an 15% dip in terms of points. And IT as a pocket looking weak.
Let's also take a look at the market breadth, though we did see mixed session coming in from the broader market indices like small cap and mid cap, but for the entire listed universe, I think it was just about even Steven. Your market breadth was 1:1. In terms of participation, considering this is a truncated week, let's see if the volumes were on the higher side or not for both cash as well as the F&O market. Remember, on the cash side, the volumes have been moving higher, and today, of course, I think it is on the lower side. We've been seeing figures of about 41,000, and the NSE F&O space clocked turnover of about 9.1 lakh crore.
Yep, so it looks slightly weak with regards to the cash market turnover. But getting in closing comments from our technical experts, Ajit Mishra, tomorrow is a holiday, so probably give us a view on what we need to watch out for come Wednesday.
So Devina, after this rebound in the bank Nifty has reached to the level where we recommend to go short in. So we suggest to carry this position and keep a close eye on the banking index. So private banks are definitely pushing the bank Nifty higher. But I doubt that sustainability above 12,000 level is going to be that easy. So considering that, do maintain a stop at 12,000 and maintain those short position. And at the same time, since we are seeing Nifty underperforming the bank index, one should continue with the stock-specific trading approach.
Hemen, your closing thoughts?
Pleasant surprise, Devina. I think the bank Nifty saved the day, so to speak, and it's posted a new high. So I thought the markets were looking a bit heavy, but obviously the bank Nifty's salvaged the situation, balanced it. So I would be positive on the bank Nifty, circumspect on the market, but yes, things are okay. Until 11,850 doesn't break on the cash market, Devina, we've had a couple of worries, but they won't manifest themselves till we break 11,850. So I think make hay while the sun shines.
Okay, great. We leave it at that. Hemen as well as Ajit, thank you to the both of you for joining in this afternoon with your thoughts on the show. And with that, it's a wrap on this edition of Khanna from Navneet and myself. Thank you so much for watching. Tomorrow's a holiday, so we'll see you back on Wednesday.